Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. Companies are facing a significant amount of pain in payments as they grow and expand their global footprint. On this episode, host Craig Jeffery talks with Roger Comins, Senior Product Manager at GTreasury, to discuss how to understand the pain of payments and ways to address the challenges organizations are facing internally and externally. Listen in to learn what is changing for payments, what matters, and how it's impacting companies, Treasury professionals, and the customer experience.
Welcome to the Treasury Update podcast. This is Craig Jeffery. Our guest speaker is Roger Comins from GTreasury. Roger Comins is a Senior Project Manager at GTreasury, and he has responsibility for defining the product vision, prioritization, and delivery of the payment factor and partner ecosystem solutions. He is a certified Treasury professional and a SWIFT for corporate qualified specialist. Welcome to the podcast, Roger.
Well, thank you so much for having me, Craig.
Now, the title says quite a bit. There is a significant amount of pain in payments. There is an element of complexity. There's a lot of things that are changing, and these are significant in different ways. So today's podcast will explore how to understand that pain of payments and what are some of the ways to address the complexity or challenges that organizations have. I guess we'll start with where you see the challenges for payment coming from. Where are they originating from? And maybe you could help explain how significant these are for either all types of companies or for certain types of organizations.
Yeah, absolutely. And you mentioned the factors of change, and companies are seeing these externally in terms of regulations or new clearing systems they have to work with, but plenty of it comes internally as well. And best to probably highlight those companies that are significantly growing their global footprint. You know, some of the banking relationships they're starting to outgrow. As they get into new countries, as I mentioned, there's new clearing systems to work with. So constantly growing number of countries, currencies, banks they're dealing with comes with more connections to manage with those banks. It comes with more formats, as you know, each clearing system can have different nuances to how you deliver a format to your banking partner in order to straight through process, which is always kind of the end goal, is to have that straight through processing to make sure your payments settle as quickly as possible and don't have errors. So that can be a lot to manage. And then as these companies are growing, maybe they're acquiring other companies, they're also gathering what I'll call tech debt, which comes in the form of different disparate legacy systems that they need to aggregate data or possibly even send out files from each to the banks. So it's not just managing from one central point, but likely across numerous systems, all these various nuances to formatting and connectivity.
Yeah, no, Roger. So did you say tech debt, like debt that you acquire and have to handle?
Yeah, phrasing we use in product management a lot.
I like it, right? You acquire multiple systems, you want to combine them, but you have to handle them. They have to last for a certain period of time. That makes good sense. I hadn't heard that phrasing before.
I think it applies here definitely as well.
It sure does. Now you said something earlier, and I'm sorry for jumping in there, but you mentioned different clearing systems, and you also jumped in and said as you go into different countries, you're hitting different clearing systems. Maybe the central banks, each of the central banks tends to have their own clearing systems. Are some of the new channels, if you will, or rails, part of that complexity, or were you just referring just by the sheer nature of going into more countries, you're dealing with more payment channels?
So the new channels, I would say, yeah, they add to the complexity, but definitely excited about the opportunity they bring and definitely want to get into that. I was speaking more towards just the existing channels that are out there. Let's say companies mostly operating in the U.S. and they start to have a footprint in EMEA, and now they need to consider how to straight through process SEPA payments, just as an example. So those were more of the clearing systems I was speaking to. As you get into each country, you're dealing with new high-value, low-value clearing systems that you need to know how to format properly in order to process within. And one last point on the complexity side is always in the compliance area. Going with the EMEA example, companies also need to start considering what PSD2 and other regulations for open banking bring their way, more so for the vendors they're working with and the banks they're working with. Some of these compliance changes are actually bringing and spurring innovation, which is exciting in terms of new channels for APIs, which we'll get into in a bit. In the U.S. here, something we're digging into now is some of the upcoming regulation for NACHA around requiring vendors or any large participant within the NACHA network to have fraud prevention measures. Again, another thing that will spur innovation. Solving that problem is important, but it does require work.
That idea of these challenges and complexity obviously grow as the organization expands or acquires their tech debt, etc. But I'm wondering if you can dive in a little more deeply on what is changing with payments and why it matters. And you had mentioned a couple items like the regulations, and you said the terms PSD2, and you mentioned a couple other elements there. But maybe you'd explain what that is as an example. But there's new. You mentioned formats, desire to do more things. But what's maybe you could start with the PSD2 as a regulation. What does that mean for someone who's not in the payments space all the time?
Absolutely. So the European Union came out with version 2 of the Payment Services Directive. You hear a similar movement around open banking coming primarily out of Europe. While yes, it's regulation, we're really excited about kind of the innovation it's spurring. Having the banks roll out extensibility to their platform. It's not only for payment settlement and services, but also to get your data for all of your bank statement data out of the banking platform more easily. It comes with essentially APIs for any service or data point that you might need from your bank. And some of the banks have more work to do on this front, but I think it's going to give us a real shift in this space in terms of having real-time connectivity for our data and services, on-demand connectivity as well, right? API endpoints essentially are a contract for you to be able to call for your data whenever you need it, no schedule reliance. And also the way APIs are created and hosted and put up on these developer portals that the banks are created are going to allow more self-service between the customer, their vendor, and their bank. Hugely exciting innovation that is coming out of the compliance area. So,
why does on-demand, why is that superior to scheduled in some cases? What makes that attractive? And you talked about the open banking and using an API. I know one of the contrasting methods is you have an FTP or SFTP process set up to go dial in, retrieve a file, at 2, 4, 6, and 8 p.m. What makes that different or better, or where is it better?
Yeah, maybe I'll use it in terms of an example. I'll think of a financial services company that we work with and why they need this real-time and on-demand nature of the APIs. With file-based and schedule-based, the ways that we normally work in, at least in the vendor to bank space, they get the job done, the straight-through processing, the update to your payments. But why customers are clamoring for this more real-time nature is in the example I'll highlight, they have customers that are of their own, looking for that acknowledgement that a payment has settled with a beneficiary or incoming funds are now available that they can relay to their own portal and their own customers. So every minute counts, and this is why some of our customers are really clamoring for that new channel in terms of API connectivity.
Yeah, that's good. I mean, I always think of it, the example of, some of the rideshare apps, they integrate with an API to the map and they integrate to a couple other elements, and it just pulls the information when you need it versus something that takes a lot of setup. But yeah, sorry to take you off track on that, but I wanted to get back to, what's changing and what matters for payments.
Yeah, so APIs are a channel, but also the settlement networks are changing in terms of new, faster payment networks or real-time payment networks. Some of these have been around for a little bit, but the real-time settlement networks are really in their infancy. There's growth needed there, I would say, but it's exciting to see lots of discussions with our own customers around what's coming here and with the banks as well. So those networks are growing.
What's an example, Roger? Give a couple examples of those networks.
Well, you see in the U.S., the Federal Reserve's getting involved, but some of the banks even working with the real-time payment network. When I say there's growth to be done there, it's mostly for that in terms of two things. One, the participants among the banks that we need to see get involved, right? If only 3 banks are participating, it's not as interesting. But also things like the dollar amount that you can send through these networks. I've seen some that are sitting around 25,000 USD. You know, it's hard for a customer to have to put in place logic that, you know, I can only send certain payments through this network. I have to know to send them through this channel and this settlement network if they're over this amount. I know customers and vendors like us deal with that, but you know, the more that this can grow in terms of participants and the scope of what you can send, the better it's going to be, of course. There's certain settlement systems that are getting better, but not quite real time, where it's exciting to see some improvements to visibility coming. I'll point to Swift GPI, right? Cross-border, and if foreign exchange is involved, there's still quite a bit of work to be done in terms of settling those faster, but at least now with what GPI is bringing to the table in terms of universal tracking, we can at least see where our payments are. It was somewhat of a void before, so we're definitely excited to see that improvement there. And it's interesting to hear from Swift some of the stories they've mentioned around seeing improvements in the processing time because now everyone is able to track every step in the way. It's all very welcome change on that front in terms of visibility.
Right. You know, moving from a time of can't see anything until maybe 3-5 days later to knowing where it is every step of the way. That's a massive shift, and that's great. Anything about settling efficiency or new channels that are changing that you wanted to comment on?
Yeah, a couple things around mobility. You know, the corporate space has been lagging a little bit behind kind of retail and consumer in terms of mobile capability, but I'm starting to see quite a bit of demand for treasury professionals needing to approve payments on the go or be able to see status updates as they're out. And I think some of it is because resources are sometimes limited at these companies, so you can't always just completely walk away. It's going to be important to factor in the customer experience to the payment space in terms of mobility especially. And then I'll call out a B2C case. We've been recently working to be able to settle through Zelle. Any industry that has or company that has B2C payments, this is more interesting actually for the true end user experience, not necessarily the treasury professional or the accounts payable team, but for the actual customer that they're dealing with at their company. The ability to no longer have to wait for a check to come in the mail, but if I think of a claims person out in the field for an insurance company, if they need to make a claims payment to one of their customers on the spot, that person can have their money in their account all visible through their mobile device right then and there. So it's important that we're thinking about the user experience for the treasury professionals and their teammates in the finance org, but also for their own end users and customers.
Yeah, that's a pretty comprehensive definition of the customer experience. Like you're thinking of your customers and who they're paying on the other side. Very, very useful. And interesting that you handle Zelle. That's not so common nowadays. Anything else that you would say matters in what's changing for payments? Anything else we need to or anybody needs to think about in terms of what's changing?
I think we've covered quite a bit. I mean, it's exciting to see things are getting faster. There's more visibility. There's more options in terms of channels huge improvements to customer experience coming to kind of the corporate side of, in terms of more mobility, more smart systems, et cetera.
Moving on from the what's the complexity to what's changing, why it matters, and then that comprehensive end-to-end customer experience with, all of this dynamism, how should a company address or solve the complexity or challenges that these issues bring about? And I know I'm pretty sure there's not one size fits all, or I don't expect you to say that. Is there a one size fits most, or how do you go about and calibrate what a company should do based on certain elements of their size or reach in terms of number of payments or channels? How do you give that advice?
Sure. Some of the people listening might be already shopping for payment hubs or TMSs or payment aggregator software to solve some of the workflow challenges in terms of reducing the number of banks they have to log into, giving them one central point to approve payments and get them settled straight through. What I would say is if you are kind of shopping this technology, bring your finance teams, your IT team, technology team along for the ride. It's not just Treasury experiencing these challenges. You're going to find out that the rest of your organization, especially in the other areas of finance, are likely dealing with this as well, and maybe from multiple back office systems. So definitely look at this from a holistic company perspective. And I will say, you mentioned it's likely not one size fits all, and I completely agree. I do think it's somewhat one size will fit most with some of these solutions out there, but there's a size threshold or a level of scale that some of the companies will need to consider in terms of their payment volume, and to where they may be a little more focused on the payment aggregators out there. And it may just not be volume, but it could be the scope of the amount of countries and banks they do need to connect to, where it's important to look at some of the aggregation software out there as well, not just in terms of centralized workflow.
Sure. Let me just do a quick definition of a couple of the terms that used, or at least what we use in some of our analyst reports. So a payment hub is a system. It's a system that allows you to take files and data in from a number of places, format it properly, do whatever checking's necessary, deliver it to the end bank, either directly or through some other type of network. A payment factory is a centralized group that handles payments, and a treasury aggregator would be a system that handles a payment factory on the disbursement side, and then the aggregation of information for data coming back, so balances, transactions, etc. So those are some of the terms that we use for that. I know as you read material in different literature, there's a number of different definitions for some of them that can be conflicting. So I just want to do a side note on that. So there's one size fits most, and you spoke. It seemed like you were quite favorable on this payment factory because there's so much complexity, and we certainly see a massive percentage of organizations that deal in 2, 3, 4 or more countries, multiple currencies, and deal with multiple numbers of banks and have to make changes. Is that a fair statement that Payment Hub will be right for quite a few organizations to simplify this connectivity?
Yeah, completely. The more that footprint grows globally, the harder it gets to maintain this through the disparate systems they may have currently. You need to leverage the economies of scale that you get from technology that have teams that deal with this day in and day out across the globe.
Yeah, so your point about engaging finance and technology teams, what have you seen as the most successful way of getting finance and tech to work together in the same direction?
More and more, we're seeing the trend to the RFP as companies are shopping, having those questions that are important to the technology team, and beyond just the treasury operational payments. It's clear to see it from the RFP questions that folks are engaging, like the teams in accounts payable, payroll, claims. So it seems like a positive trend is going that way. And that's more for the customer who is currently shopping. Maybe you're a customer that already has technology in place. For for the treasury team, let's say, look to have a conversation with that vendor. Can you leverage that technology for the rest of your finance team? There may be challenges your teams are facing that you're not aware of in terms of trying to straight through process with the bank. Many if I'll point to the U.S., are likely sending notcha files off the back of ERP systems, even if they have like a TMS in place for their treasury operational payments. Your teams are about to face some significant challenge with some of the notcha regulations coming up. If you do have a payment hub in place for your treasury team, I think it's important to have that conversation with the rest of the organization. Like I said, leverage those economies of scale.
So, Roger, what's an example of a regulation that would create that type of challenge and need for more flexibility? Is it just around security, or is it something else?
Let me define a little bit more about what I'm specifically referring to, because there's quite a few changes that come all the time with notcha, but there's one that we get asked about a lot, and I think it's because of the impact it'll have and the scope of it. It's the requirement to do account verification. Basically, the beneficiary matches the beneficiary account listed to prevent some of these account takeover scams that we're seeing. So it really important change to be driving, and we're happy to see notcha doing that with some of its larger participants. I think it'll spur some important change in the space. That's what I'm specifically referring to, because it's important, but is also going to be an impactful, a large change for vendors and for the customer trying to manage that themselves from their ERP system.
Yeah, so let me see if I have it correct. So historically, you could send an ACH, a low value payment. It would go to the account based upon the account number. It might include the payee information, it might include their name, but there's no requirement to do any type of matching. The name that's listed on the account actually matches the account number. And what you're saying is there's some regulations that'll allow you to do some checking. That way, if someone takes over somebody's payroll system and they change they leave the payee name the same, but they change the account to go to an account that the criminal controls. Is that what you're referring to, or do I have that right?
You nailed it. Yep, you nailed it.
Yeah, and you could see how that would be so important on the security front and compliance. So that's a good example. I guess I'm just going to do a couple comments about that, because you saw what happened on the card arena. You know, PCI DSS, the payment card industry, data security standards arose and created standards for making sure you're locking down the information, protecting the data. And that's been out for a long time, and it's become a formal process. And then if you look at SWIFT, for example, the SWIFT CSP, or Customer Security Program, got put in place several years ago, and it continues to increase in terms of what they do to protect the network, the surface area of attack on payment systems. And now we see it spreading to a third area of settlement. In this case, notcha for some additional requirements to tighten down security. Now, it's not a whole security standard. It's certainly some requirements that address part of it. So I guess one question is this security issue. Do you see that continue to expand across all channels with more requirements and maybe even more security frameworks, or are we at the end?
No, it absolutely will be expanding. The account takeover, for one, is just one piece of it. There's also a huge amount of companies experiencing spear phishing scams with the attempt to essentially make it seem like that your CFO's mandating an urgent payment instruction, and too many times those actually work and those payments get out the door. So there's so many forms of fraud to combat. It's always growing, mostly specific to the U.S., but this account takeover piece is important to solve globally. It's not just a U.S. domestic problem. So for a vendor like GTreasury, this is constantly top of mind, and the scope is definitely expanding.
Yeah, that's good. And Roger, before I ask you to give any final thoughts on this topic of understanding the pain of payments, I wanted to just mention to the listeners that there is an ebook, The Pain of Payments, underwritten by GTreasury. That ebook is available for download. You can find that in a couple locations. some of your notes on strategictreasurer.com/podcast. There'll be a link there, and you can also find that link on strategictreasurer.com's website and in some of the show notes that you have on your phone. So I encourage you to look at that as that book explores the topic in some more depth. Now, Roger, wanted to get back to you on any final thoughts you want to leave with people about understanding the pain of payments.
Yeah, to maybe address the Treasury professionals listening, we spoke a lot about the specific pain to straight through process payments from numerous technology stacks that might be in the back office to their banks successfully. One thing that's not noted but is very important when you're looking at technology out there, you're going to find there's a ton of other benefit here. Managing these numerous technology stacks in the back office and getting the data from each of those is not just a payments problem, right? So Treasury folks are also dealing with this in terms of forecasting. All these data points are important. So I would just mention that make sure you keep that in mind as you're looking towards maybe some of the technology out there, that it's also a benefit in terms of gathering data for your forecasts, for your reconciliation processes as well. That it should all be connected to make that experience better.
You can tell you're in product because you think end-to-end on data, end-to-end experience from the different users. I think that's awesome. Excellent. Roger, thank you for your time and your insight into understanding the pain of payments.
Yep. Thank you, Craig.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.